Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate investment expert Jason Balara. Jason is the CEO and co founder of Lark Capital Group, a real estate investment firm that focuses on Class B and C value add multifamily in the southeastern part of the U.S. Now, in addition to his real estate endeavors, Jason is also a veterinary surgeon and has utilized intense focus to hone his practice here over the last 12 years, giving him flexibility to build his real estate investment firm. Now, Jason's goal is to allow passive investors, many of those who come from the medical field, just like him, to grow their wealth by making smart investments in the multifamily space. Now, guys, I'd like to welcome our guest for today's show, Jason Balara. My friend, how you doing today?
I'm good. I'm good. Thanks for having me on,
Yeah.
Kevin. I'm excited for
Exci-
the conversation.
Yeah, excited to have you here. I know I was on your show not too long ago, so excited to now put you in the hot seat and
Yeah.
learn a little bit more about Lark Capital and what you guys are all about. So let's back it up a little bit, Jason. For those that might not know who you are, what you do, let's start in the beginning. Just a little bit more about yourself, and then ultimately how you found your way into the real estate space.
Yeah, sure. Thanks. Yeah, I mean, I think people often, at least until recently, have known me from one of two worlds. They know me from the veterinary world, or they know me as, sort of the DIY guy that started in construction and buying my own houses when I was, I think the first one was like early 20s. I was always a passion of mine. I'm originally from Boston, Massachusetts. The weather's not good there. So when I saw myself where just deciding what direction to go, to me at the time, construction meant outside all the time. And so I wasn't super excited about spending all my winters outside. Now I live in sunny Southern California, so maybe not a part of life that I imagined at the time. But I did go the veterinary route, but real estate never left me. I always saw that as kind of a as ownership being a way to get ahead, create passive income, whatever the case may be. I focused pretty heavily on my veterinary career. Most of the real estate and construction I was within the residential side of things, my own homes, friends' homes, that kind of thing. And then in 2020, I really decided I wanted to get sort of back into the real estate world, at least on a higher level, and that's when Lark Capital was founded. Um, d Definitely, I mean, to most people, 2020 has, you think about the pandemic, it actually really had nothing to, I mean, it impacted me, but it had nothing to do with why I decided at that time. It was more because we had a 1-year-old son.
Mhm.
And as a surgeon, I worked a lot, I was on call a lot. And so I was either gone or not available a lot of the times. And that started to weigh on me quite a bit when he was young and has remained a theme for me. And so started Lark Capital as a way to be, find something that although it's not always passive, as you know, to be in the real estate world, unless you're truly a passive investor, it's at least something that is location independent. So I can't do surgery outside of an OR. It's not like a
Yeah.
thing I can do at home in my living room while my kids are there. And so it was a way to kind of start to think of things that I could have in my life outside of the OR. And so we started that, went into syndication, got a couple of deals in Atlanta, in and around Atlanta. That was late 2021, early 2022. I also invested passively in other people's deals. I got really pretty excited and aggressive about the process. I was a part of a self-storage joint venture self-storage deal. So it's something that I'm very passionate about. And then, I mean, I'm still passionate about it. But then 2022, when interest rates hiked, it changed the market, I think, for everybody. And that's probably where things started to shift a little bit for me. But I'll maybe stop there, Kevin, and we can go whatever direction you want with that.
Yeah, no, that's great. I appreciate the background. No, I think you left it at a good spot. I mean, you got started in 2020, really got active and aggressive buying quite a number of assets, and then ultimately 2020, late 2022, rates started going up, and so I guess you bring us up to that point in time. Last couple of years have, it's been interesting, right? It's been a challenge for a lot of operators. Just us kind of crossing our fingers that ultimately, another year will bring a reduction in interest rates, and we just really haven't seen it, right? And so no one really knows what the future shall bring. Again, our hopes are high, but ultimately, the pain has already been felt. And so, where are you guys at today? I guess maybe give us kind of a preview of what the last 12 months has looked
Yeah.
like, but then also, kind of forecast out what the next 12 to 18 months might look like as well.
Yeah, it's funny. I kind of you almost think about things as pre 2022 and post 2022. But yeah, 2022 was a hard year. We actually had a deal under contract basically as the rates were like jumping right up. And people in the space probably know this, but maybe outside don't realize that a lot of deposits at that time were non-refundable, and so we had to drop out of a deal. Had a large non-refundable deposit, so it was a challenging time. It was also the time that I have. So I was working a W-2 job as a surgeon. I also had a side business. At the time, it was just a side business as a mobile surgeon and was also doing real estate. And it had all become just too much, right? Too much, not enough time in the day. And so I left the W-2 job in May of 2022, which probably couldn't be a worse time to have left that job from a financial standpoint. Um, I needed to figure things out. And so the first thing I did was we actually ramped up the mobile surgery business quite a bit. Like when had never really marketed it before. Really grew that business. I actually hired a business coach to a, it was almost like a therapy slash business coach to kind of get through that time. Just to make financial sense of things, we focused very heavily on asset management of the existing assets to get through this storm, and then the other piece is I started a fund in 2023, kind of with the knowledge that we had from, kind of everything that happened. And the fund is structured such that I'm targeting multifamily real estate, but also small business acquisitions,
Hmm.
with the idea of marrying the appreciation tax benefits, kind of virtually everything but the cash flow because there isn't a whole lot of cash flow coming out of real estate at the moment. So marrying the real estate piece with the cash flow that can be acquired by small businesses. And I learned in 2022 and early 2023 with my surgery business. I'm sure it depends on the asset class in real estate, but in a business I can pull levers and make changes really pretty quickly.
Mhm.
And when you have like a multifamily property, most of the people have 1 year lease. So there's not a whole lot you can do quickly in those spaces. You're kind of trying to think very long term. Whereas a business, you can really ramp things up fairly fast. So that's why the fund is structured that way, and that's been my main focus over the last 12 to 18 months, and still looking at business acquisitions, mostly in the construction space, because that
Hmm.
is that is my background. I'm about to be a California licensed contractor come March 6th, assuming I pass the test. But that's on the horizon, and I've been just looking at a lot of construction businesses to acquire.
Yeah, no, no, that's very, very interesting. Would love to, maybe unpack that a little bit. So, I guess just generally speaking, when you're looking to marry those two types of investments together inside a respective fund, just is there a certain buy box with regards to price range of an individual asset to that of a potential business that you're buying, or I guess how do you how do you create an even balance there? Is maybe the
Yeah,
better question.
yeah, and it's interesting that they're very. I find they're underwritten pretty differently. So
Hmm.
in, the real estate space, most of the time we want to look at in-place operations, but if you're looking at a value add project, oftentimes it's a lot about projections, and in some ways based on projections. In the business world, I don't know if this will change over time if there's higher demand, but really truly it's very much based on in-place cash flow. And
Hmm.
so you do underwrite them a little bit differently. Within the structure of the fund, the question that you just asked me, I asked my SEC attorney. I was like, I don't are there rules around this? Can I even combine the two? Because the idea was for me, okay, I've got this real estate. I want to continue to acquire more real estate, but at the moment the real estate, both my deals and the deals I'm invested passively are not producing a lot of cash flow. Some of them are producing some, and that's great, but not to the level that these small businesses can. And so the SEC tells you the percentages of um, capital that can be allocated towards each of the asset classes. And so there's rules around being, uh, on title for the real estate. There's rules around, basically they say no more than 20% of the equity can go towards the small business acquisition.
Hmm.
However, the interesting thing is you can purchase small businesses with much higher leverage, right? So most of the time you
Yeah.
can buy them. An SBA loan is going to be 90%. And so real estate right now, you're probably looking at 60 to 65%. So in terms of asset value owned, it turns out almost equal. And your cash on the businesses tends to be quite a bit higher than it will be in a real estate deal.
Hmm. Yeah, no, I appreciate that. So I guess maybe get us up to speed today. I mean, have you acquired any businesses? Are there any that you're actively pursuing? Just uh, would be curious to know a little bit more about, you said construction industry. Is there any specific niches within the construction trades that you're seeking? And just curious as to what's out there. I know I'm just very
Yeah.
intrigued by the small business world, and I think it's very interesting structure that you have here. So more
Yeah.
curious than anything else.
Yeah, sure. No, in the interest. So yes, I've been actively pursuing. It's taken longer than I had hoped. I had a deal under contract. So the general construction business. I think we went under contract late July. Worked on that deal for 6 months, and it just recently fell through. There was a lot of and this isn't uncommon to the construction world, but there were a lot of things happening off the books that
Mm.
through due diligence and conversations and things like that ultimately just came to the point that there was too much risk involved there, and so had to back out of that deal. I have looked at a number of others, made offers on others. Don't currently have anything under contract, but there was one. It's interesting you ask, kind of the types of businesses. My initial my initial thought process was I'll get a general construction company, right? We can build houses, do renovations, things like that. But what I've found the deeper I dive is there's a lot of very specialized um, niches within real estate and or sorry, within construction. A lot of people know about like your plumber, your HVAC, your electrician, that kind of thing, and think of those as specialized. One business I came across, and we made an offer, and unfortunately got beat out by one other group, was for a scaffolding company.
Hmm.
And to be honest, I didn't know there were scaffolding companies. I thought, developers had their own scaffolding, but it makes a whole lot of sense once you actually dive into the business because that scaffolding has to live somewhere. And so a lot of large developers, they might have offices, but they don't necessarily have a yard, and they're subbing everything out. And so
Hmm.
the scaffolding, the business model was simple. Like someone's like, oh, we have this, we're going to build this building. Can you come put up scaffolding? It sits there for X number of weeks or months, and you're paid on uh, installation and deconstruction and a rental rate. And so it's actually a fairly simple business. And so when that one happened, it really opened my eyes to where you could get in kind of at a specialty level in the construction
Yep.
world instead of trying to manage a whole process, which ultimately I like that, but there's a lot of money to be made even in these sort of niche areas.
Yeah, no, I love that. It's interesting you bring that up. We've got a good friend of ours that owns a fence rental company, and
Yep.
most of their contracts are for. I'd say most of it's like large scale commercial developments. That
Right.
has to have like safety fencing around it, and that's literally their business. They have
Yeah.
a huge whatever multi-acre yard with fencing that they store,
Yeah.
and that's it. They charge for the setup, they charge for the delivery of the setup, the day by day rental, and most of the time it stays there for many months on
Yep.
end, and then the deconstruction of it and return back to the yard. So
Right.
I forget what the metrics were, but my understanding is that it pays for itself very quickly.
Right. Yeah. I mean, that's it. And you have an asset heavy business, which
Yeah.
worst case scenario, you have to liquidate some of the, whether it's scaffolding, fencing, like there's a lot of protection on the downside too. And it's funny. I went when we were looking at the scaffolding business, I went down this rabbit hole, learned more about scaffolding than I ever thought. But there is a one of the largest, it's an internationally operating scaffolding company, and they're privately owned, but they're worth $6.5 billion. Like that's
Wow.
the market value of a scaffolding company. They produce scaffolding now as well, but like it didn't start that way. And it was like, so the things that yeah, the more you learn about it, like it seems like specialization is really a pretty valuable place to be in.
So what's the strategy then? I know this is a real estate show, but I'm intrigued here, and I think this is a fun conversation. I think it could be very, very eye-opening and valuable to those that are tuning in as well. I guess what does that hunt look like? When you're out there now, you've kind of decided. It sounds like that at least you want to start going down some of these niches a little bit more, right? But what does the hunt look like, right? Like, in the multifamily space, you're going to call up a number of brokers that transact within the regions that you're looking to acquire assets in. You also might do some direct to owner marketing, depending on maybe the size and scale of projects you're seeking. But generally speaking, those are normally like the two angles you take, or the
Yeah.
two approaches you take. What does it look like in the business world? What are you actively doing today to drum up new opportunities and new leads?
Yeah, and it's not actually that dissimilar, and it's very much based on the size of the business. So everything in the in real estate world, multifamily, we talk about cap rates. That's how most of the valuations are calculated. In the business world, it's a multiple of cash flow. Call it SDE or EBITDA. Like it's a multiple of cash flow. they the multiples change. They the higher the better you're doing in terms of cash flow. Uh, if it's a usually less than $1 million in cash flow, they talk about it as SDE, sellers discretionary earnings. If
Hmm.
it's over a million, somewhere in that range, they start to refer to it more as EBITDA. I think there's the three zones. Like there's the very small. It's kind of almost like if you think about it, if you were going to buy, I don't know, like a fourplex versus a 30 unit versus a 400 unit, right? And it's not that dissimilar in the business world where it's like you're going to have these sort of small SDE might be under 500,000 in cash flow for the year. Once you cross the million threshold, it starts to get quite a bit more desirable, like somewhere in the million to 3 or 5 million of EBITDA. That then your competition goes up, and now once you get above that, you're going up against private equity. And so the the search looks different depending on which space you're targeting. Like for me, I'm I don't want to be in the smallest zone because oftentimes you're just buying a job at that point. And so I want to be, somewhere in that like 500,000 to $1.5 million SDE. And a lot of that comes from broker relationships, or they are listed on websites. It seems a lot more readily than like a multifamily deal. I don't feel like you go like there's I guess LoopNet and Crexy and stuff like that. But those are the deals usually that got past a broker or didn't, the broker didn't have their
Hmm.
personal
Hmm.
relationships. It seems like in the business world, a lot of them do make it onto, some sort of listing. Biz buy sell seems to be the most common and readily used. Uh, but yeah, I think same thing though. I'm developing relationships with brokers. I've got a really good relationship now with a broker who specializes in only construction listings. That's all he
Mm.
takes. And they do a really good job with sort of packaging the deals in a way that you can digest it. You have to remember, like when you're buying a, 300 unit apartment complex, you're going to have really probably pretty high quality financials to look at. When you're buying a fourplex or a small mom and pop owned business, it might still be handwritten. And so you have to find, kind of that space to get in there and get the information that you need. But it's interesting. It's more different than I thought it would be, but there are some like parallels.
Yeah. And then as far as the SBA lending, they also have there's a cap, isn't there? What is it? Is it 5 million?
5
Is
million.
that their
Yep.
ceiling?
Yeah,
Okay.
5 million. And that's the other thing is why once you get, because I mean, the multiple you can get a higher multiple the higher the cash flow.
Hmm.
right? So people talk about you pass that 1 million mark, you might be going from looking at 2 to 3 times on your purchase price to sometimes then like 5 to 10 on your and the depending on the industry, maybe even more than that. But it's so at that point now you're competing against private equity or you're working with private equity as a searcher and you find someone who's it's kind of like raising capital from investors. You find someone who's going to fund your search and then be, sort of your capital partner on a business. And a lot of people are looking for, just like in real estate, looking for a value add strategy to that business. Like
Hmm.
where can we grow it? Where can we insert efficiencies? A lot of them are, not using a lot of technology and stuff like that. So it's just kind of um, figuring out and again for me I'm mainly focusing in the construction world, so other industries might be a little bit different, but the reality is a lot of them are still family owned businesses.
So is there an opportunity to go like direct? I mean, like being that like you really know the subset you're looking for. I mean, is there an opportunity to go compile the list of all
Yeah.
these businesses? I'm sure just via Google searches. I'm sure there's other, rudimentary ways that we could go about finding them and just reaching out directly. Have you taken that approach?
I have not gone direct yet. My strategy, good or bad, was I want to start with I want to find something listed. I don't feel like I have the time to really do a proprietary search well.
Yeah.
And so I want to start by working with brokers, find something good, and then I want to add on, right? So like if you're buying, if we go back to that scaffolding company example, you buy a scaffolding company. Well, a lot of scaffolding companies work with stucco companies or masonry companies. So then you go and you buy something that, kind of ties into it well. And so I still like the idea of kind of owning the job or the project from start to finish, but I've opened my eyes to not having to be in that position. And so I think that the grand vision is, yeah, I would own multiple construction companies that all tie in together and are complementary to each other.
Yeah.
So I think once you're in there, now you can say, okay, I work with five, if I have scaffolding and I work with 5 guys that put up stucco, and then hey, look, this guy's 70, looks like he might, that's when you can start to build those relationships, and you can work with unions and things like that to find people that are ready to exit.
Yep. And then that's great advice and great feedback. And then lastly here, maybe we'll move back on the real estate. I'm guessing I'm just thinking of a from an efficiency standpoint, based on kind of your buy box and what you're looking for, size organizations you're looking for. I think you mentioned 500,000 to 1.5 million of SDE. Does that at least get you as far as hierarchy within the organization? Does that at least get you also a level of managerial staff in there to where you're not stepping in, you're not you're not buying yourself a job at that point? There's some additional layers within the organization that have some expertise outside just the owner themselves that is now leaving the organization.
Yeah, in that zone, and again, I mean it's scaled. If you have 500 in SDE, you're probably going to have to work in the business some. If you have 1.5 million SDE, you probably got a management team and you can work at a business development level. So
Hmm.
it's excuse me, it varies, but yeah, you are, at least me, I'm not necessarily looking to buy a bunch of jobs. I'm looking to bring something into my portfolio that generates cash flow for myself and my investors in a space that I understand. Like that's really, and real estate's the same.
Yep.
I've been around real estate forever. Like I understand the product. Like people make a lot of money in Bitcoin, but I don't get it. So I don't play in that space. Like I don't understand. So I like to do things that make sense to me. To your point about the buying yourself a job, like one of the businesses that I first came across when I started the process was a nail salon. I was like, okay, I don't know anything about that. I've never even been in one, but like the margins are good. Like they're a decent business, but most of them are so small that you probably are buying yourself. You can buy them for cheap, but you probably are buying yourself a job because it's there's not enough in there to hire an operator, if you will, but
Hmm.
there's a like on paper it looks like a decent profit margin, but if you're not going to work there yourself, it probably doesn't make a whole lot of sense. So it's just
Sure.
you need to have something that either is already scaled enough to have that management team to some level, or know that you can do it pretty quick. Or maybe you just want to work in that industry, and that's fine. Some people do. Some people want to be that
Sure.
operator. So it's just whatever, kind of spot you want to fit in.
Yeah, no, I appreciate that. Well, let's switch gears back to real estate again. After all, we are a real estate show,
Yes, sir.
so let's. But that was a fun conversation. I appreciate you indulging me. Um, the future, I guess. Got this fund out. You're looking for real estate opportunities as well. I guess before we go too far ahead in the future, I guess what's happening right now? What are you seeing in the marketplace? Are you underwriting opportunities? Are you proactively going after deals? Are there any deals that you've acquired, multifamily wise, within this new fund that you've recently launched?
Yeah, and actually that the first definitely still happy with real estate. The first deal that we got into the fund is a real estate deal. It's a 452 unit in Arizona that we partnered with a mentor of mine. So there is definitely still a piece of the puzzle. A little bit of this for me is just the fund has a thesis, and I really feel I need to prove that concept. And so having a piece of real estate and a business to get things started and see that it really works the way I think it should work, is why I've been mainly focused on business acquisition. I have looked at a lot of real estate deals. It's been, at least for me, like it's been tough to find things that um, pencil
Yeah.
in today's market. It's just, I think it probably all comes down to cost of capital. And I think people that have a huge amount of capital that they can put into a deal, you're gonna do better on your leverage. You're gonna do better on your the rate that you can get on your loan, that kind of thing. So I think I'm cautiously optimistic about the space. I also think I want to prove a track record, I guess. I want to
Hmm.
make it more that people invest with me because I've done what I said I was going to do, and that includes on my existing deals and on anything that comes into this fund. And I think um, a lot of people came into the space around the same time I did that are not doing it anymore. And I want to be, I want to prove that investors come first, and I think that will help me in the future, whether that's in 2 years or 5 years or 10 years, I don't know. But I think I want to be someone who's hard to ignore because I operate things well. That that
Yeah.
that's basically where I'm looking to get to at this point.
I love it. I love it. And then lastly, before we wrap it up here, um, you being able to really find a balance with your veterinary practice, as well as your real estate business. I mean, you're ultimately growing both of them simultaneously. Just maybe give us some gold nuggets there of how you've been able to find that just
Yeah.
level of balance and literally growing two successful organizations simultaneously. I mean, that's difficult to do.
It's team. I
Mhm.
mean, I think it's team and culture, which I think is like kind of an easy and abstract thing to say, but I I have been very lucky and targeted with the people that I have on the team. I think the surgery business, like I literally work in that business myself, probably maybe on average 12 to 15 hours a week, just the time that I'm in surgery. I have uh, one of them happens to be my wife, but I have a good team. She's a technician, and she's the practice manager, and like I literally just show up and do surgery because I have a team that can take care of everything else for me, scheduling, all of the stuff that has to go along with it. And I enjoy surgery and I'm good at it. And so it's kind of like it's all at this point, it's like almost a fun thing to do. I could grow that business more if I wanted to, but it definitely no one else is doing the surgery. If I could hire a surgeon or I could do more time in surgery, but I want to have multiple streams of income
Hmm.
that don't necessarily rely on my hands. And
Yeah.
I mean it's a thing I didn't think about when I was younger, but it's a thing I think about a lot now where it's like if I got bit by a dog on the hand, like I I can't do surgery until that heals. If I break my hand doing something silly, like there are things that uh, could definitely impact my ability to earn money
Yeah.
in that business. And so I think a lot differently about how, and that's why with the business acquisitions, I'm not going to start a framing business where I have to swing the hammer. Like it
Sure.
just, I enjoy it. I like framing, but it's like it doesn't, that's just not going to be the best use of my time at this point.
Yeah, no, I love it. I love it. Well, Jason, this has been a fun conversation, my friend. I appreciate you coming on and sharing all your insights here. For those that want to learn more about your existing fund and just everything that you have going over there at Lark Capital, where's the best place to track you down?
Yeah, I mean everything's on the website. It's larkcapital.com. LinkedIn is Jason Balara. Like there's not another Jason Balara, so you can Google me and it's not a common last name. I think everybody with that last name is in my family, so you shouldn't have any trouble finding me. But the website has really everything and has a a schedule a call type of button.
That's funny. I say that all the time. I'm like, just I'm active on LinkedIn and Facebook, Instagram, but just type my name. I don't need to give you my
Right.
handle. Just type in Kevin Bupp, and there might be another one in the world, but like, there's not many, and there's definitely
Exactly.
probably none that are in the real estate space that I'm in. So I'm
Yeah,
not too hard to
exactly.
track down.
Yeah.
Well, fantastic. Well, Jason, pleasure again, my friend. Always good catching up with you guys. I'll put all that information in the show notes, and best wishes to you, my friend, in your search,
Thanks.
both on the business, more real estate, and just growing Lark Capital. So it's a pleasure speaking with you again.
Yeah, appreciate it. Thanks for having me on. I really enjoyed the conversation.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.